Hello and welcome to First Talk, where we simplify your super. Today again I'm joined by Peter and Jason, and I'm Andy, and we're from the Financial Advice team. Today's video is actually aimed at our younger members and something that they may not necessarily give consideration to one of the features that actually provided with their superannuation accounts. Jason, a lot of our younger members, they start work, they build up their savings, and they kind of do get to that life stage where they start thinking about buying their first home, like you did with your partner.
Yep.
So can you just share with us, as in some of the thoughts that were going through your head when you were buying that first home?
Yeah. I mean, so that just happened quite recently. Until then, no significant debt. Now all of a sudden, we've got this big mortgage. So the thought that I had is, well, if I die, how is my partner going to service the mortgage and meet her needs? And the answer is she couldn't. So hence that life insurance comes into play. And for me, having enough coverage to pay off that mortgage so she doesn't have to worry about that and can just focus on other things.
Okay, excellent. But Peter, not everyone's got a partner when they buy their first home. So again, some of our members might be going, I don't need that life, and it's just me that owns the property. So why should they give it some thought?
Well, they can. One strategy might be that they just have the debt that's sold off by their family in the case of them passing away, and they just pay off the debt. But also they can have some life insurance at that point in time, so that if they then have a medical condition later on, at least they've got that life insurance initially up front, and they don't have a position where they can have it cancelled or unable to apply for it.
So it's not just about the now, it's about the later on
as
well. And then they could also then find a partner, and then they're bringing the partner into the household, and they want to make sure that home is kept for them as well.
Comes back to what Jason was saying, then you can look at increasing your levels of cover, not just to pay off the debt, but also to keep your partner in the life that they're accustomed to.
So, okay, that's life, but we also offer some other type of insurance called TPD. So why would it be that someone may be interested in that?
Yeah, so TPD stands for Total and Permanent Disability Cover. So if someone suffers an injury or an illness and they're unable to work again, then they can have also a lump sum paid out to them. So if people that are in high risk occupations, it might be a bit more appropriate for them, but it's also appropriate for everyone. They might need a bit more cover than just paying off the mortgage to modify the home, because they need to make adjustments to cater for their disability, and also maybe, again, a little bit more to sustain them with a bit more additional income. So they might need a little bit more cover in those cases.
So underneath the first super account, you got life, you got the TPD options, but we also offer another type of insurance, and that could be appealing, especially to younger members as well.
Yeah, certainly. I mean, with the TPD, that's obviously something that's pretty significant, but you've also got income protection as well. So
and when's that important, Jason? So we insure our car, we insure our homes. When's income protection?
Yeah, well, you insure the income. So obviously, if you sort of have an injury or an illness and you can't work for a year, how am I going to meet those bills over that next 12 months? Well, that's where the income protection can come in for more of a shorter term thing, as a bit of a stopgap. Replace the income, I can meet the bills, I can meet the mortgage or whatever it might be, and then potentially return back to work after that period.
So why would you take income protection within your first super accounts?
Yep, so obviously you do need to apply for it. The premiums are deducted from your first super account, so it doesn't impact your cash flow, which for some people is pretty important.
And then why would you look for income protection outside of your super account?
So on the other side of things, I mean, obviously, yes, that comes out of your cash flow. One of the good things, it is tax deductible, so you get a nice little tax break on it, and then it allows you to build up your super balance, so future you will be happy and glad you did that.
And probably the other key aspect to it as well, income protection outside of super does differ, and you can get some more features than what you can get within super. So it's kind of like horses for courses is the catchphrase on that regard.
Andy.
So okay, we've talked about life and TPD, which we'd say is you're eligible to obtain with your first super account. What do we mean by someone being eligible for life and TPD?
Yeah, so this is one of the government recent change in terms of insurance and super. You now have to have or be at least 25 years of age and also have at least $6,000 in your super account before you then have that life insurance provided to you and TPD cover.
So as soon as you meet those two criteria, you automatically receive life and TPD for a sum assured.
Might not be enough, you might need to apply for more.
What if you're not 25? What if you're not haven't got $6,000? What can you do there?
Yeah, so it's not automatically triggered, but you can actually still apply for it. So you can go online and opt in is the terminology we use, and apply for that level of cover, without it being automatically triggered.
And alternatively, if we're going online, you can also then just phone our contact centre, and they can do it over the phone as well in regards. So today, our conversation has been aimed at our younger members who may be buying their first homes and giving some serious thought about how do I kind of repay this mortgage, or how do I meet the home loan repayments if something should happen to me? So hopefully we've answered some of those questions and given you some thought around it. Go online, have a look at our insurance offering. There's calculators there to assist you. But if you're really unsure about how much you should have and what type of insurance you should apply for, then talk to the financial advice team. So Peter, Jason, or myself are more than happy to sit down and try and work that out, what's best for you. So thank you very much for joining us today. Take care, and hopefully we see you next time.